Hi everyone, today we'll be going over accounts, February-March 2022, paper 2 question number 4. This is structured paper 2 which consists 4 questions, 2 of 15 marks and 2 of 30 marks, and we are also given a time limit of 1 hour 30 minutes. Since question number 4 is of 30 marks, we will be attempting to solve this question under 30 minutes. So without any further delay, let's get started. R Limited uses absorption costing at one of its factories. This factory has 2 production departments, machining and assembly, and 2 service departments, support and canteen. Some budgeted overheads have already been apportioned for April 2022. The remaining budgeted overheads for April 2022 are as follows. So we are given the depreciation of machinery and the production department supervisor's wages. We are also given the additional information. So we are given the floor area, power, machinery cost and number of employees for each of the 4 departments. And we are told that the canteen provides meals for staff in the machining, assembly, and support departments. So this basically indicates that the overhead for canteen should be apportioned towards the remaining 3 departments on the basis of staff, since the canteen is providing meals for staff in the 3 departments, right? So the basis of apportionment for canteen overheads would be the number of employees in these 3 departments, machining, assembly, and support. And we are told that the support department's overhead should be reapportioned on the basis of production department's machinery cost. So that would be right here. Alright, then let's have a look at the first question. We need to complete the following tables showing the apportionment of overheads and the reapportionment of service department overheads. Okay, so for the first part, we need to apportion the depreciation of machinery. And since we are talking about machinery, the basis for apportionment would definitely be the machinery cost. Right, so let's figure out the total machinery cost for all the 4 departments. That's going to be 850,000 plus 110,000 plus 15,000 plus 25,000, which results in the value of 1 million. Okay, and now we will be apportioning on this particular basis. So it just means that out of the total machinery cost of 1 million, 850,000 belongs to machining department, 110,000 belongs to assembly department, 15,000 belongs to support department, and 25,000 belongs to canteen. And on this basis, we will be apportioning the total depreciation amount of 25,000. So let's figure it out for machining department. So the total of 25,000, and we can see that out of the total machinery cost of 1 million, 850,000 belongs to machining department. So that's 850,000 divided by 1 million, which gives the depreciation of machinery to be apportioned in the machining department to have the value of 25,000 times 850,000 divided by 1 million, which gives the value of 21,250. Let's repeat the same process for assembly department. The total is 25,000, and out of 1 million machinery cost, 110,000 belongs to assembly. So that's 110,000 divided by 1 million, which gives the depreciation of machinery to be apportioned in the assembly department to have the value of 25,000 times 110,000 divided by 1 million, which gives the value of 2,750. Now for support, that's 25,000. And out of 1 million machinery cost, 15,000 belongs to the support department. So that's 15,000 divided by 1 million, which gives the value of depreciation of machinery to be apportioned in the support department to have the value of 25,000 times 15,000 divided by 1 million, which gives the amount of 375. Now finally for canteen, that's 25,000. And we can see that out of 1 million machinery cost, 25,000 belongs to canteen. So that's 25,000 divided by 1 million, which gives the depreciation of machinery to be apportioned to the canteen department to have the value of 25,000 times 25,000 divided by 1 million, which is 625. Now we just need to record these 4 values in the table below. Let's do that. The depreciation of machinery for machining department, we figured it out to be 21,250. For assembly department, it was 2,750. For support, it was 375. And for canteen, it was 625. Now we need to apportion the production department supervisor's wages. So the thing to remember here is that we only divide these supervisors' wages to the production departments. Okay, so that means only machining and assembly. And since we're talking about supervisors' wages, that should be apportioned on the basis of the number of employees they've been handling. So for these 2 departments, the total is 75 plus 35, which gives the total of 110 employees, right? Now on this basis, we need to divide the production department supervisor's wages of 19,800 towards machining as well as assembly department. Let's do that. For machining, that's the total of 19,800, and 75 employees out of the 110 belongs to machining. So that's times 75 by 110, which gives the production department supervisor's wages to be apportioned to the machining department to have the value of 19,800 times 75 by 110, which gives the value of 13,500. And now for assembly department, that's 19,800, and we can see that 35 employees out of the 110 belongs to assembly. So that's 35 by 110, which gives the production department supervisor's wages to be apportioned to the assembly department to have the value of 19,800 times 35 by 110, which gives the amount of 6,300. So now we need to record these two values in our table as well. Let's do that. That's 13,500 for machining department and 6,300 for assembly department. Okay, now for this row, we just figure out the total. For machining, that's the sum of these three values, 106,350 plus 21,250 plus 13,500, which gives the total to have the value of 141,100. For assembly department, that's the total of these three amounts. That's 28,600 plus 2,750 plus 6,300, which gives the total to be 37,650. For support department, that's the sum of these two values, 7,180 plus 3,075, which gives the value of 7,555. And finally for canteen, that's 13,870 plus 625, which gives the value of 14,495. Now we need to reapportion the canteen. And we were given the information that the canteen provides meals for staff in the machining, assembly, and support departments, which means that this basis for reapportionment would be the number of employees. And we are apportioning towards the three remaining departments, which is machining, assembly, and support. So the total is 75 plus 35 plus 8, which results in 118. Now we need to divide the total amount of canteen, which we figured out to be 14,495, right? Let's apportion it. So the total is 14,495. And for machining department, that's going to be 14,495. And out of the total employees of 118, 75 belongs to machining. So that's times 75 by 118, which gives the reapportionment of canteen towards machining department to have the value of 14,495 times 75 by 118, which is 9,212.92. So we can just round it off. That's going to be 9,213. Now for assembly department, that's going to be the total of 14,495 times, out of the total of 118 employees, 35 belongs to assembly. So that's 35 by 118. And this gives the reapportionment of canteen towards assembly department to have the value of 14,495 times 35 by 118, which gives the value of 4,299.36, which we can round it off to 4,299. Now finally for support department, that's 14,495 times, out of the total of 118 employees, 8 belongs to support. So that's 8 by 118, which gives the reapportionment of canteen towards the support department to have the value of 14,495 times 8 by 118, which results in 982.71. Again, we can round it off, so that's going to be 983. So let's record these three values in our table below. For machining, we figured it out to be 9,213. For assembly, it's 4,299, and for support, it is 983. And since we are reapportioning this amount to these three departments, we need to subtract the very same amount from canteen. So that's 14,495, but in a bracket indicating that this now needs to be subtracted from the canteen department. Okay, now we need to figure out the subtotal for this row. So that's just going to be the sum of these two values. For machining, that's 141,100 plus 9,213, which results in the value of 150,313. For assembly, that's 37,650 plus 4,299, which results in the value of 41,949. For support, that's 7,555 plus 983, which results in the value of 8,538. And for canteen, that's 14,495 minus 14,495, which is 0. Now we need to reapportion the total of the support department, that's 8,538. Okay, so the total was 8,538. And we are given the information that the support department's overhead should be reapportioned on the basis of production department's machinery cost. And the production department's machinery cost is right here, 850,000 and 110,000, which gives the total to be 960,000. Okay, now for the machining department, that's just the total of the support department of 8,538, and we can see that out of the total machinery cost of 960,000, 850,000 belongs to machining. So that's times 850,000 divided by the total of 960,000. And this gives the reapportionment of support department towards the machining department to have the value of 8,538 times 850,000 divided by 960,000, which results in the value of 7,559.69. And again, we can round it off, so that's going to be 7,560. Now we repeat the same process for assembly department. That's going to be the total of 8,538, and we can see that out of the total machinery cost of 960,000, 110,000 belongs to assembly. So that's times 110,000 divided by the total of 960,000, which gives the reapportionment of support department towards assembly department to have the value of 8,538 times 110,000 divided by 960,000, which results in the value of 978.31. Again, we can round it off. So that's 978. Now we need to record these two values in our table as well. Let's do that. So for machining department, we figured the value to be 7,560, and for assembly department, it was 978. And since we apportioned these values towards these two departments, we need to subtract the exact same value from the support department. So that's 8,538, but in a bracket indicating that this needs to be subtracted. Now we need to figure out the total, which is just going to be the sum of these two values. For machining, that's 150,313 plus 7,560, which results in the total overheads for machining department to be 157,873. And for assembly, that's 41,949 plus 978, which results in the total overhead for assembly department to have the value of 42,927. And for support departments, that's 8,538 minus 8,538, which is 0. And this concludes the first part of this question. Now we can move towards the second one. We are given additional information regarding machining department and assembly department. We are given the direct labor hours per month as well as machine hour per month. And for the second part of this question, we need to calculate the overhead absorption rate for each production department to 2 decimal places. Alright, so the overhead absorption rate will be either based on the direct labor hours or the machine hours. And we can see that for machining department, the direct labor hours per month is 3,200, whereas the machine hours per month is 5,600. Obviously, machine hours is greater than the direct labor hours, which means that for machining department, we will be calculating the overhead absorption rate based on the machine hours per month. And for assembly department, we can see that the direct labor hours per month is 2,400, whereas machine hours per month is 1,800. And obviously, the direct labor hours is greater, which means that for assembly department, we will be calculating the overhead absorption rate based on the direct labor hours per month. Okay, let's figure it out for machining. We will be starting with the total overheads that we figured out in the above table. For machining department, we figured it out to be 157,873. Let's write it down. That's 157,873. And we already figured out that we will be calculating the overhead absorption rate for machining department on the basis of machine hours. So we just divide this overhead by the total machine hours per month, which is 5,600. And this gives the overhead absorption rate for machining department to be 157,873 divided by 5,600, which results in the value of 28.19. And since we figured it out based on the machine hours per month, we need to write it down as well. So that's per machine hour. Okay, now we repeat the same process for assembly department. We will be starting with the total overhead that we figured out in the above table, which is 42,927. Let's write it down. So 42,927. divided by, and we already figured out that for assembly department, we will be calculating the overhead absorption rate based on the direct labor hours per month, which is 2400. So we divide the total overhead by this value. And this gives the overhead absorption rate for assembly department to have the value of 42,927 divided by 2400, which results in 17.89. And since we figured it out based on the direct labor hours, we need to state it clearly. So that's per direct labor hour. Alright, this concludes the second part of this question. Now we can move towards the third one. We need to state two reasons why overheads may be underabsorbed. So the very first reason is that whatever production that we forecasted, that is greater than the actual production. So we can say that the actual production is lower than the forecasted production. Is lower than the forecasted production. And the second reason would be that the actual overheads is higher than the forecasted overheads. Let's write it down. Actual overheads is higher than the forecasted overheads. Okay, this concludes the third part of this question. Now we can move towards the fourth one. We are given additional information. At another factory, a single product is made and the factory uses marginal costing. And we are given the following information regarding direct materials per unit, direct labor per unit, selling price per unit, fixed cost per month, as well as the production capacity per month. Then the factory has been operating at below its normal capacity. However, recently demand for a company's product has increased considerably, and the directors believe there is an opportunity to increase profits, so they are considering two options to meet increased demand. Okay, first of all, let's have a look at the question. For the first part, we need to calculate the monthly profit to be made by option 1. So let's have a look at option 1. We need to increase the selling price per unit by 5%. So let's increase it. We can see that the previous selling price per unit was 27 and now we are increasing it. So that's 27 times 1, and since we are increasing, we need to add. We are increasing it by 5%, which we can write down as 0.05. which gives the new selling price per unit to have the value of 27 times 1 plus 0.05, which results in 28.35. Alright, then we need to increase the production to 16,000 units per month. So previously it was 15,000 and we'll be increasing it to 16,000 now. Then the overtime is paid at an additional 4.10 per unit. So this just means that our usual production capacity for 15,000 units, the direct labor rate would remain the same, which is 10.10, right? But for the additional units of 1,000, we need to give the usual rate of 10.10 as well as the overtime rate of 4.10. So that's plus 4.10, which results in the new direct labor for the extra units to be 10.10 plus 4.10, which is 14.20. Okay. Then we need to reduce the monthly advertising by 2,000, which means that the fixed overheads will be reduced. So fixed cost previously was 44,000. So now we reduce it by 2,000. Minus 2,000, which results in our new fixed cost to have the value of 42,000. Alright, so now based on these modifications, we need to figure out the profit for the month. Let's create a statement. So since we're trying to figure out the profit, we will be starting with revenue. Okay, and we know that we will be producing 16,000 units, and under the marginal costing method, our assumption is that whatever units we produce, we will be selling those units. So we will be selling 16,000 units, which means that the total revenue will be 16,000 times the selling price per unit, which we figured out to be 28.35. And this gives the new total revenue under option 1 to have the value of 16,000 times 28.35, which is 453,600. Let's write this down in our statement. So that's 453,600. Then we will be subtracting the overheads, right? So the very first one is direct materials. Let's have a look above. So there are no changes to be made to the direct materials per unit, which means that we can just multiply this rate of 8.80 to the total units of 16,000, which is 16,000 times 8.80, and this gives the total direct materials under option 1 to have the value of 140,800. Let's record this in our statement. That is 140,800, and since we are subtracting it, I'm just going to record this in a bracket. Then we have the direct labor. And the first one is our normal rate. So normal rate will be for the 15,000 units, right? Right here. So that's 15,000 times the rate of 10.10. And this gives the normal direct labor under option 1 to have the value of 151,500. Let's record this in our statement. That's 151,500. And then we also have the direct labor for overtime. Let's have a look above. For the extra 1,000 units, our direct labor rate would be 14.20. So the overtime rate is 1,000 times 14.20, which gives the direct labor rate for overtime under option 1 to be 14,200. Let's record this value in our statement. 14,200. Then we know that direct materials and direct labor are the variable costs, so now we can easily figure out our contribution. Okay, so the contribution is just the sum of these four amounts. That's 453,600 minus 140,800 minus 151,500 minus 14,200, which results in our contribution under option 1 to have the value of 147,100. Then after receiving the contribution, we need to subtract the fixed costs. Let's have a look above. So we can see that we figured out our new fixed cost to be 42,000. Let's substitute this value into our statement. So that's 42,000. And we're subtracting it. So after subtracting the fixed cost from contribution, we get our profit. And this amounts to 147,100 minus 42,000, which results in 105,100. Alright, so this is the profit to be made under option 1. Now for the second part, we need to calculate the monthly profit under option 2. So let's have a look at our option 2 first. Okay, we are told to increase production capacity per month by 15%. So previously our production capacity was 15,000. So let's figure out the new production capacity. That's 15,000. And we are increasing it. So that's times 1 plus we're increasing it by 15%. So we can write down as 0.15. And this gives the new production capacity, or the total number of outputs to be produced each month, to be 15,000 times 1 plus 0.15, which is 17,250. Okay, then we will increase the production capacity by purchasing additional machinery costing 78,000, and this machinery will be depreciated at 20% per annum. Alright, so this depreciation per month will also act as a fixed cost. So let's figure out the depreciation charge per month. Okay, so we have the cost of 78,000. And our depreciation rate is 20%, so we can just multiply by 0.20, but this will give our annual depreciation, which corresponds to 12 months, but we only require the depreciation per month, so we're just going to divide it by 12, and that gives our depreciation per month to be 78,000 times 0.20 divided by 12, which results in the value of 1,300. And this should be added to the fixed cost, so I'm just going to write down the fixed cost here. Previously, our fixed cost per month was 44,000, so now we need to add the additional depreciation as well. That's 44,000 plus 1300. And this gives our new fixed cost to have the value of 45,300. Okay, then we are told that the selling price will remain at 27 per unit. Supplier of materials currently offers a trade discount of 20%. This will increase to 30%. Okay, so let's have a look above. Previously, our direct materials per unit has the value of 8.80, and this is the value after getting the trade discount of 20%. So let's figure out the direct materials value without any discount, right? So 8.80 is the value we receive after receiving 20% discount, which means that we only pay for the 80%. So that's 80% of direct materials is 8.80, right? So let's figure out the direct materials without any discount. That's 8.80 divided by 0.80, which gives the actual direct material per unit to have the value of 11. Alright, and now we are told that the trade discount will increase to 30%. So the actual direct materials now would be 11 times the value that we receive after giving 30% discount, which means that we now only need to pay for the 70%. So that's times 0.70, which gives the new direct materials per unit to have the value of 7.70. Alright, now for the fourth information, we are told that the additional machinery will be more efficient and production will not require any overtime working. Okay, so the direct labor rate will remain the same. So previously we had the direct labor of 10.10, and this will remain the same for additional units as well. Alright, now based on these information, we need to figure out the profit for the month. Let's create a statement. Okay, like before, we will start with revenue. Let's have a look above. We figured out our new production units to be 17,250, and the selling price is to remain at 27 per unit. So the total revenue is just going to be the number of units, which is 17,250, times the selling price per unit, which is 27. And this gives the value of revenue under option 2 to have the value of 465,750. Let's record this in our statement. That's 465,750. Then we subtract the variable cost, and the first one is direct material. Let's have a look above. We figured out our new direct material per unit to be 7.70. So the total direct material would be the number of units, which is 17,250, times the direct material rate per unit, which is 7.70. And this gives the total direct material under option 2 to have the value of 132,825. Let's record this in our statement. 132,825, and this is a variable cost, which means that this needs to be subtracted. So I'm just going to record this in a bracket. Now the next variable cost would be the direct labor. Let's have a look above. So the direct labor rate is to remain the same at 10.10. Now the total direct labor would be the total number of units, which is 17,250, times the direct labor rate per unit, which is 10.10. And this gives the total direct material under option 2 to have the value of 174,225. Let's record this in our statement. That's 174,225 in a bracket because we will be subtracting this. Now this is all of our variable costs, so we can easily figure out the contribution. And that's the sum of these three values. So that's 465,750 minus 132,825 minus 174,225, which results in our contribution under option 2 to have the value of 158,700. Then we need to subtract the fixed costs. And we figured it out above. Let's have a look. So the total fixed cost under option 2 is 45,300. Let's write it down. 45,300. And after subtracting the fixed cost from contribution, we can easily figure out the profit. In this case, that's going to be 158,700 minus 45,300, which results in the profit for the month under option 2 to be 113,400. Okay, this concludes the second part of fourth question. Now we can move towards the fifth question. We are given additional information. The cost of additional machinery required in option 2 would be financed by an issue of ordinary shares. Now we need to advise the directors which option they should choose. We need to justify our answer by considering both financial as well as non-financial factors. Okay, first of all, let's compare the profits between the two options. For option 2, we have the profit of 113,400, whereas for option 1, we only have the profit of 105,100, which means that option 2 definitely produces a higher profit. Let's write it down. Option 2 produces a higher profit than option 1. And under option 2, the cost of additional machinery is being financed by an issue of ordinary shares, which means that there will be an additional cost for the share issue, right? So option 2 will have an additional cost for share issue. But we know that all of the profits that we figured out above is only based on the forecast. So we cannot be 100% sure whether the forecast will be accurate or not. That is still a question, right? So will forecasts prove to be accurate? And for option 2, we are purchasing a new machinery, right? So maybe the workforce will require training to work on the new machinery. Let's write it down. Will workforce need training on new machinery? And for option 1, we know that we are increasing the selling price. So maybe the higher selling price may reduce demand. Let's write it down. Higher selling price for option 1 may reduce demand. And we know that for option 1, we would also require overtime, right? And workforce may appreciate it or not, right? That is still a question. So let's write it down. Overtime may or may not be attractive to workforce. Alright, now based on these factors, we need to make a decision and advise the directors which option they should choose. So personally, I would advise the directors to go with option 2 because this does not require any higher selling price, which could possibly drive down the demand, as well as overtime for the workers, which they might or might not appreciate, right? Let's write it down. So the directors should choose option 2. Alright, this concludes the fifth part of this question. Now we can move towards the sixth one. We need to state 2 benefits of budgetary control. So budgetary control is basically setting a budget and then motivating the workforce to achieve that particular set budget, right? So this will definitely assist with motivation. Let's write it down. Can assist with motivation. And the next benefit would be that budgetary control assigns each department with responsibility, right? So this definitely facilitates with the responsibility accounting. Let's write it down. Budgetary control can facilitate responsibility accounting. Alright, this concludes the first part of the sixth question. And now for the second part, we need to state two limitations of budgetary control. So the very first limitation is that a poorly set budget can demotivate. So if we are setting an unattainable budget, then obviously the workforce will realize that that is not possible however hard they work. So they might lose all of their motivation, right? Let's write it down. A poorly set budget can demotivate. And the second part is that budgets are always based on estimates which might or might not be accurate. Let's write it down. Based on estimates, so might not be accurate. Alright, this concludes the second part of the sixth question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.